All right, what's going on, everybody? Hope you guys are having a good day. We're coming live from the new office. Hope you guys like the background. I think it looks pretty good. But today I'm just going to do a quick video going over risk management, the calculator I use, how I do it, and kind of like the entry we use as well. So just going to get into everything like that. So I'm not going to waste any time. Let's get straight into it. So I'm going to go ahead, bang, shrink myself. That's good. Perfect. So obviously, if you guys haven't watched any of the strategy videos already, I highly recommend just going to my page, checking them out. I actually just dropped like an A through Z guide going over everything from broker setup to execution. So if you haven't watched that, I recommend checking that out. I didn't dive super deep into risk management there, so I want to do it in this video, but go check that out if you guys haven't already. Super helpful. But let's just get straight into it. So going over it, we're just going to go straight into the entry strategy. And I'll go over a recent example of a trade that I actually took and made some good money on. So I took AMD on Monday. I actually ended up day trading most of this, but I'll show you guys exactly how I did it. So again, when a stock breaks out, I like to use 5-minute opening range highs to take my entries, or when it breaks above a specific key level or, a strong resistance area, whatever it may be. So on Friday, I ended up buying AMD right here above Thursday's high last week. So the week prior, this was Thursday because market was closed on Friday. So I bought above this high right here, retested the 10 SMA, reversed, and then broke above this high. So we're going to go over there to the 5-minute and go 1, 2, 3, 4 days ago because today's Thursday, Wednesday, Tuesday, Monday. Perfect. Yep. Right here, very, very much dead smack. So pretty much AMD opened, pulled back in the first 5-minute, jumped up, very, very easy execution. I'm going to draw this line actually to make it very clear to show you where my breakout was. So it was above Thursday on that previous week. This was the breakout level I was looking for. Above Thursday's high right here, that was my entry. Go back down to the 5-minute, Thursday, Wednesday, Tuesday, right here. Perfect. So boom, usually I like to trade 5-minute opening range highs. In this case, AMD didn't break out on that first 5-minute candle, so I couldn't enter it until actually the second 5-minute candle, which is when it was pretty much right at that breakout level. So I took, it was, I guess you can call it like 5, 10, 15 opening range highs, if that kind of makes sense. So the way I like to do it is like this. Stock breaks out. After it breaks out, you're looking for the next 5-minute candle to take out the high of the first one. Make sure your volume's with it as well. This was my entry on AMD, pretty much bought right here at 547.62, and then immediately my stop loss goes at the low of the day. So every single time I take a trade, the stop loss goes at low of day because it's the most significant level that will tell you if the trade is invalidated, it'll wipe low of day. Are there times where the stock will end up wiping out low of day and going right back up? Yes, 100%. It happens, but what are you going to do about it? More times than not, it's better to respect the rule because a lot of the times also, if it takes out low of day, it invalidates the trade and you just want to take your 1% loss or whatever you're risking and then just go from there. Take your next trade. So I'll show you guys the risk calculator that I use and kind of the formula in order to see, well, how many shares do I buy? How much do I know I need to risk? According to my account size, etc. So I'm going to go ahead and just show you this right here. I don't know if I can really even move that image, make myself bigger. There we go. Okay, so risk management, basically I never risk more than 1% of my entire capital per trade. So how do you do that? I want you guys to just whip out your calculators literally as you're watching this video. Go to your calculator app, make sure it's at 0, okay? Where's the camera? Make sure you're at 0. So how to calculate 1% rule following opening range highs. So the thing is, we're always buying shares relative to where our entry price and stop loss price is. The stop loss price and entry price aren't something that we really get to choose. We follow the entry strategy and go according to that. So we have to use this calculator in order to risk properly. So first things first, how to risk 1% following ORH. 1% of your capital. To do that, you're basically going to take 1%. So literally just do 1%. Times whatever your account value is. So let's say you have a $5,000 portfolio or $10,000 portfolio. You can just take that number. For this example, I'll do 10K. So let's say we have a 10K account. You're going to multiply that by 1% or 0.01, and you're going to get $100. So this means that every single trade you take, you can risk $100 per trade. But that does not mean you can only put $100 into the trade. And we're talking about shares here. Options, a little bit of a different story. But risk does not equal equity in the trade. When it comes to swing trading, you can put really large amounts of capital, or like even 70% of your portfolio into a single trade if the risk management allows you to do that. Like I've had times where you can almost full port safely because the R to R is tight enough where you can size in so large and you can get a really good fill. Yes, it's easier to get stopped out if you have a tighter stop, obviously, but on the times it does work out, you can make a lot of money. So again, $100, let's say, of this 10K account, that is not how much money you're putting into the trade. That's how much you can lose if the trade hits your stop loss. So now, going back over to Thinkorswim, we're going to take this. So our entry price, this 5-minute or 15-minute, whatever you want to call it, opening range high, our entry price would have been 547.35. Now, not every single time you're going to get a perfect fill, so let's just round this one up. We're going to do 547.5. So 547.5. That's going to be our entry price. That's what we're buying at. And then our stop loss is going to immediately go at low of day. It's a non-negotiable, low of day. Sometimes I even go 1 to 5 cents below low of day just because I'm superstitious like that. But you know, you can do whatever you want. But low of day, stop loss has to be there. So our stop loss low of day is 527.08. I'll round it out. Let's just say 527. You're going to take your entry price, 547.5, minus your stop loss price, which is let's just say 527. And now the distance between entry and stop loss is going to be $20.05. That means the distance between your entry price and your stop loss price, it's a $20.50 difference. Now, let's go back over to our risk calculator and we can see, well, you know, how many shares should we buy to only risk $100? So now we're going to take 1% of our capital. In this case, it's $100. So we take $100 because that's our max 1% risk. We're going to divide it by the entry price minus the stop loss price, which we got was 20.5. So now you divide your 1% minus the entry price minus the stop loss price, and that's going to equal, the number you should have gotten if you follow the same equation is 4.87. You can just round it up 5 shares. So what that means is basically on this AMD trade, if you were to buy 5 shares at 547, 547.5, and your stop loss were to be low of day at 527, if you entered this with 5 shares and got stopped out for low of day, you only would have lost a max risk of $100. That's it. You would have lost 100. But on the flip side, let's say we did buy those 5 shares at 547.5. So you can do 5 times 547.5. You're putting around $2,737 into the trade. So you're obviously putting a lot more than $100 into this trade. You're putting around, I don't know, like what was it, 2.7K? Yeah, 2.7K, but you're only risking $100. And that's pretty much it. So that's why when it comes to swing trading, everybody's like, low win rate, low win rate. It's like, in some cases, yes, it's not always going to be a low win rate. But the reason because of that is we're going for the tightest R to R possible so that we can enter in with a really large size and risk very, very little. We're not going ahead and just putting in 50% of our equity and then just letting it ride and not having a proper stop loss. Our losses are going to be very small because we're using that 1% rule, which means, yeah, we're going to take, 5 or 6 little cuts here of, $100 or $50 losses, depending if you go 1%, 0.5, 0.25%. But on that one time where you get a really good R to R, you're able to put 50, 60% of equity while managing risk, and the trade goes in your favor. You are well more than blowing all of those losers out of the water. And that's what gives swing trading its entire edge. It's by managing risk properly every single time. So when you do hit that home run, it's going to completely wipe every single thing out. I'll do one more example for you guys. This is one of the only trades I took this week, actually. I took a TSL trade. I took this today, actually. So we can kind of go over this. It's not a typical flag breakout. It was more of a reversal. So it's going to be a little difficult, but you know what? I'll still go over it. It wasn't a 5-minute opening range high setup, but my rules still say, they still say the exact same. Regardless of where I'm entering in the day, whatever it is, I'm always going to leave my stop loss at that low of day. Even if I'm entering an hour, 2 hours into the day, I have to keep my stop loss at low of day. That's why, let's say a stock breaks out and you miss entry, you don't want your R to R to be super far apart because it's not even going to be worth entering. You're not going to make that much money and you may just sit and draw down. But I'll go over this trade for you guys. Tesla ended up making a really nice move, actually. Excited to see what happens tomorrow, but exact same concept. Let's go over it. Let's use a $5,000 account this time. Or actually, let's use a $20,000 account. Let's do bigger size. So let's say we have a $20,000 account. You're going to take your phone. Again, you're going to do 20,000 times 1% or 0.01. And my max risk is $200. Very self-explanatory. So $200 is my max risk. Not that I can put $200 into the trade, but $200 is my max risk. So again, same exact concept. I entered this around 1247. It kind of broke out of this flag pattern and then ended up ripping Made a really nice move. I actually day traded this. I'll show you guys. There you go. Oops. This was my very, very light day trade. I actually entered this earlier in the day. This was my entry. We'll go there. I thought it was right here. I entered earlier. So pretty much this is the entry. It was a reversal off of a big weekly base on TSLL. Daily time frame looked really good as well. Nice push. Figured we have some momentum today, and that's exactly what we did. So let's go over this trade together, shall we? Let me remove this now. Okay, cool. So let's go. I'm gonna do over here. This makes it a lot easier for you guys watching. Okay, so stock breaks out here, TSLL breaks out 1247. We get this big candle, finally breaks out of this high, whatever it is, starts moving on the daily time frame. Our entry, if we entered right here, would be 1248. Let's just round it up, 12.5. You're buying TSL today, 12.5. So we're gonna take 12.5. Again, your entry price minus your stop loss price. Stop loss, always low of day. Let's see what it is. It is 12.07. We can keep that one accurate. So 12.5 minus 12.07, and that's going to equal a 43-cent stop loss. So 43 cents distance between entry and stop loss. Now, we can take, let's say, $20,000 account, $200, which is our max risk, and then divide that by the distance between entry and stop loss, which is 0.43, and that's going to equal 465 shares. So that means you can buy 465 shares at 12.47, and then stop loss goes at low of day. So if you get stopped out for low of day, you're only losing $200, and this trade would have costed you, let's say 465 times 12.5 was the entry price. You're putting in roughly $5,813, and your max risk would have been $200. And let's see today what your win would have been if you were to take this. I went pretty light size. I went like 0.25 on this, but let's see. 12.5 would have been your entry. By the end of the day right now, it's at 13.8. So now we can calculate like what your profit would have been. So we'll go 13.08 minus what was your entry price? 12.5. And that gives you a 58 cents between your entry and today and now's price. So you'd be a little over a 1-to-1 R to R right now. So if you take 0.58 times 465, you made around, what was that, $270? I may be a little bit off, but there's your profit. You're basically at a 1-to-1 R to R. Your profit at the day would have been $270, max loss $200. And that's pretty much it. You just hold this trade, swing it to the rest of the criteria. If you guys haven't watched that video, again, just go back to it. But very, very simple. The risk management rules is not hard. I'll show it again to you guys one more time if you guys want to screenshot this. This is going to be in my free guide, which I'm actually releasing pretty soon here. So definitely stay tuned. You guys will be able to just throw in your email, stuff like that, and you guys will get access to a free blueprint. And I'm pretty sure this exact page will be in there, but that's pretty cool. But yeah, that's pretty much it. That's all that goes into risk management. And then obviously managing your trade, a little bit of a different story. So again, go watch those other videos if you guys want. But that's pretty much it. I hope you guys enjoyed. If you guys want access to JSS, which is my mentorship that I dropped, we have a couple spots left. You guys can go apply in the description. Pretty sure the type form should be there. So if you guys want to work together, I have a lot of students doing good. So if you guys are interested, go for that. If not, you guys can still apply for the same thing and get access to JV Trading Academy, which is the community that we do live trading in, my trades that I take, my analysts, everything like that. You guys can go look into either one if you want. But yeah, that's pretty much it. So hope you guys enjoyed. If I helped you in any way, like, subscribe, follow my Instagram, follow my TikTok. And that's pretty much it. So hope you guys enjoyed this video, and I'll see you guys in the next one. Peace.